Hello students, welcome to my YouTube channel. I am Kaushik Nagarajan, your accountancy faculty, who's going to take you through the concept accounting for companies, issue of shares. In my previous video, I have explained the concept of shares, the types of issue, the various types of subscriptions, and face value, what is a shareholder, who's a shareholder, and what is forfeiture, reissue, capital reserve, all these concepts. And of course, we have also worked out some 17 sums, sum number 1 to sum number 17. And I hope you all would have liked that particular video. If not, please do go and watch the video. The link of the previous video is also attached in this video. And please post your valuable feedback and suggestion or comments which will help us to give you even more better content than the previous one. And please do subscribe our channel if you are not subscribed as of now, and please share it with your friends who have taken Commerce Group. Let's begin our today's session. Today we are going to start from sum number 18. In this 18th question, it is given that X Limited issued 15,000 equity shares of rupees 100 each, payments as rupees 25 on application, rupees 25 on allotment, and rupees 50 on first and final call. The applications were being received for 14,000 shares, where however this is a matter of under subscription, because company has come with the issue of 15,000 shares, but subscription has come only for 14,000 shares. In case of under subscription, before you proceed the problem, ensure whether they have attained that 90% minimum subscription. For example, in this case, company has issued 15,000 shares. Just check it out, what is 90% of 15,000 shares. This gives you the exact value, the amount of shares that you have to receive it. So what is 90% of 15,000? It is 13,500 shares. So first you ensure whether have you got that 90%. Yes, 13,500 is our 90% shares. But however, we have received 14,000 shares. So it is good to go. Let's proceed further. It is mentioned that all the money were duly received except the first call, that is first and final call on 1,500 shares, which means in this 14,000 shares, the company has received the entire face value, that is rupees 100, on how many shares? 12,500 shares. I am just splitting this 14,000 into two, 12,500 and 1,500. On this 12,500 shares, the company has received the entire face value of rupees 10. So that means what value will be getting it is 1,25,000. Oh, I'm sorry, it is 100 rupees. So it means 12,50,000. So you have got 12,50,000 on this 12,500 shares. But on this 1,500 shares, I am again going to divide it into two, which means amount received and amount not received. So that means on this 1,500 shares, the final call amount is only rupees 50. That means 50 rupees you'd have received on this 1500 shares. So calculate what is 1500 into 50. Yes, quickly calculate and tell me 1500 into 50. It is 75,000 rupees. Right? So 75,000 rupees you have received it. So what is the amount that you have not received? 1500 into another 750 rupees. So that gives you another 75,000. So 75,000 you have not received it. So add these two values, that is 12 lakhs and 50,000 rupees plus 75,000. How much you are getting it? 13 lakhs and 25,000. Check whether do we have that particular option. So if you add these two, you will get an amount of rupees 13 lakhs and 25,000. This is our answer. So that means our answer is in C option. So yes, we have got the option C. So you can tick option C for this question. Moving on to the next question. The next question says calls in advance, that is the amount which has not been adjusted. Calls in advance which is not adjusted till 31/3/2021 is to be shown under which head of the balance sheet? So this question is from the notes to account concepts. In share capital we have the journal entry type of problem, preparation of notes to accounts, preparing cash book, preparing balance sheet and notes to account. So this particular problem is from the concept of notes to account. So it is very simple. Calls in advance. So it is a liability. The company is liable for the amount what they have received in advance. And of course it is a current liability. It is a current liability. So it is option C, current liability. Moving on to question number 20. Rishi Limited was registered with equity share capital of rupees 2,50,000 in shares of rupees 100 each. So 100 rupees is nothing but this is our face value. 100 rupees is our face value of the shares. It issued 2,000 of such shares payable rupees 25 per share on application, rupees 25 on allotment, rupees 20 on first call and rupees 30 on final call. So which means the face value of rupees 100 has got divided in such a way that on application rupees 25, on allotment rupees 25, so 50 rupees, and 20 rupees on first call, so 70, and the balance 30 rupees goes in the final call value. All money payable on the application and allotment were duly received, but when the first call of rupees 20 per share was made, one shareholder holding 100 shares have failed to pay. So on 100 shares you didn't receive the money, and another shareholder who's holding 200 shares have paid the full amount along with the first call. That means even the second call money has remitted in the first call itself. Final call was not made till the end of the year. So which means the company has not made the final call until the end of the year. Okay. Now let us work out this problem. I am just erasing this question. This I am erasing it. Okay. Now it's a very simple problem. Just listen carefully. It is mentioned that how many shares were being issued by the company. The company is issuing 2,000 shares of rupees 100 each. So 2,000 into 100. So this gives you the amount of total share capital. So how much that comes to 2000 into 100? It comes to an amount of rupees 2 lakhs. Okay, it comes to an amount of rupees 2 lakhs. Okay. Now, how the amount of 100 face value has got divided in? It is quite simple. 2000 rupees, sorry, 2000 shares has got split in such a way. Application and some amount goes in allotment and amount on first call and amount on final call. So this is the breakdown. Now let me fill the values. On application, it is mentioned the amount is rupees 25, and on allotment it is mentioned again 25 rupees. On first call it is mentioned an amount of rupees 20, and on final call it is 30 rupees. Okay, so the company have received application money without any issues. Even allotment money they have received completely. So let us calculate what is the amount that they have received on application. So 2000 shares into 25 will give you an amount of rupees 50,000. So on application the company has received 50,000 rupees. Similarly, even in allotment the company has received 50,000 rupees. Now coming up to the calls. Okay, the amount that company have to receive is 2000 shares into 20. That means the company have to receive 40,000 shares. It has to receive an amount of rupees 40,000. But it is mentioned the question that one shareholder who is holding 100 shares did not pay the amount on first call. So that means on 100 shares you would have not received the amount of rupees 20. So that means you have to deduct 2000 rupees from the receivable amount of 40,000. So that will give you only an amount of rupees 38,000. But in addition to this, it is also mentioned that there is one shareholder who is holding 200 shares have paid the final call money along with the first call itself. So that means that amount 200 shares into 30 rupees will give you 6,000 rupees. So that needs to be added along with this 38,000. So 38,000 plus 6,000 will give you an amount of rupees 44,000. Now when you have done the first call money, when you have called the first call amount, you have received only 44,000. So that means 50,000 and here 50,000 and here 44,000. If you add these three values, you will be getting an amount of rupees 1 lakh and 44,000. So check, do we have 1 lakh 44,000? Yes, we are having an amount of rupees 1 lakh and 44,000. So this is the right answer. I hope you all are able to follow me, and please post your comments, which is very useful for us and which will motivate us to give you a valuable content in the upcoming videos. Moving on to sum number 21. So it's a very simple question. Private placement shall be made up to 50% or it will be made up to 100% or it is done to 200% or for 500%. So private placement, which means it is a concept of ESOP. So private placement, how many persons? Private placement of shares shall be made up to 200%. Yes. Okay, so private placement of shares. Okay, private placement shall be made up to 200%. Right? Any doubt so far? Okay. Now moving on to sum number 22. What is mentioned in sum number 22? It is stated that Rishabh Limited decided to issue 75,000 equity shares. How much? 75,000 equity shares of rupees 10 each at a premium of 20 percentage. Always remember, premium when it is given in percentage, it should be applied on the face value. So 10 rupees the face value, 20 percentage is the premium. So 10 into 20 by 100, that gives you an amount of rupees 2. So 2 rupees is your premium amount, and your issue price will be rupees 10 face value plus rupees 2 premium, that gives you an amount of rupees 12. So 12 rupees is your issue price. Okay. The whole amount was payable on application, which means it is a concept of lump sum. You'd have heard there are two varieties. One is lump sum and the other one is installment. So this is a lump sum method. The entire amount, the whole amount was payable on application, lump sum method. Application for 1 lakh shares were received. So it is a matter of oversubscription. It is a matter of oversubscription. So two things you have to understand. Oversubscription case, lump sum method. Applications for 5,000 shares were rejected. So which means out of 1 lakh shares what you have received, you are rejecting altogether 5,000, which means you still have 95,000. So company have received 1 lakh shares. Out of this, it is mentioned very clearly that 5,000 shares are getting rejected. So that means still you have got 95,000. Okay, so 1 lakh shares you have received, which is the total amount of shares that we have received, but in that we are rejecting 5,000, so 95,000 is still there. But how much the company has come for the issue? The company has come for the issue of 75,000 shares only. That means how much is in excess? 20,000 is still in excess. Okay, so 20,000 shares is still in excess. Right, let's see what is said further. 5,000 shares have been rejected and shares are allotted to the remaining applicant on pro rata basis. Okay, so that means what is the pro rata basis? Simple. Applied, allotted. Let us have like this. One is applied and the other one is allotted. So in the applied, it is simple that 95,000 shares have been applied. For this, we are going to issue only 75,000. So 95 is to 75 is the proportion. This is what we say it as pro rata allotment. So on proportional basis, you allocate these shares to the applicant. What is the question that they have asked? Amount refunded by the company will be. It's a very simple question whereby we are rejecting 5,000 shares. Am I right? So 5,000 shares are getting rejected. So how much is your application money? It is the entire face value, right? That means 10 rupees the face value, and the premium 2 rupees is also added along with your application cost itself, because it's a lump sum method. So that means 12 rupees. So 5,000 shares into 12, right? 5,000 shares into 12. So how much will it give you? Exactly 60,000 is the amount. 60,000 or 6,000? Check it out properly. It is, sorry, The question is amount refunded by the company will be. Okay, so what is the amount that the company will refund? That's a question they have asked, right? So that means 10 rupees is the face value and 2 rupees is your premium amount. So 12 rupees. So what amount that you will refund it? 3 lakhs. How come? Can you please explain how you have got 3 lakhs? Amount refunded by the company, they said. Yes, exactly. Now look here. If at all it is an installment case, then of course you have a chance of taking over the excess application money on allotment. You can adjust the excess application money on allotment. But this is a lump sum method. Okay, so it's a lump sum method whereby the 20,000 shares which has been applied in excess can't be adjusted elsewhere. The amount what you collected on this 20,000 shares. So what is the amount that we collected on this 20,000 shares? 20,000 shares into an amount of rupees 12. How much is the value? Yeah. So 20,000 shares into 12 rupees. So how much you'll be getting it? 20,000 shares into 12 rupees. So that gives you 2,40,000. Okay, this gives you an amount of rupees 2,40,000. Okay. Similarly, this 5,000 shares is also getting rejected, right? So that 5,000 shares also you'd have received 12 rupees. So which gives you 60,000. So adding these two will give you 3 lakh. This is to be refunded. So you have to refund 3 lakhs. So look here how they have set the options. The options have been given in such a way that for 22nd question, whereby you have got 60,000. So if at all you are considering only this 5,000 shares which has to be refunded, then you go only with 60,000, which will be a wrong answer. And again, suppose if we are going to consider only this 20,000 shares which can't be adjusted elsewhere, so you get 2,40,000, you may go with 2,40,000, which will also be a wrong answer. So the correct answer is 3 lakhs. So look at the options, how they are freezed. They know where you go wrong, or they understand like how students will evaluate or where they will make mistakes. Based on that, the options have been fixed. So please be very careful. This is a sum where it is not an installment basis, it is a lump sum basis. And in lump sum basis, whatever we got in excess can't be utilized elsewhere. We have to refund it as such. So that's why we are refunding here the entire 3 lakh rupees. Now moving on to the next problem, sum number 23. So let me clear out this segment. Okay. So sum number 23. What is mentioned in sum number 23? It is said very clearly that the company has offering 15,000 shares of rupees 10 each. Okay. I repeat it. Just a minute. Let me clear this segment. Okay. So the question says that company offers 15,000 shares of rupees 10 each to the public. The amount is payable as follows. So 15,000 shares at the rate of rupees 10 each. So 15,000 into 10, that means 1,50,000 rupees is the share capital value. Okay, so the amount has got broke down in such a way like on application 3 rupees, on allotment it is 3 rupees, and first call it is a 2 rupees, and on second and final call it is again 2 rupees. So if you add all these, you get 10 rupees. So it is exactly equal to the face value, and issue price are also same. So it is issue of shares at par. Okay. Applications were received for 20,000 shares. So it is an oversubscription case. It is an oversubscription case. Okay. So 20,000 shares we have received it. That means excess is 5,000 shares is excess. Okay. That means you'd have collected 3 rupees application on this 5,000 shares. So which will give you an amount of rupees 15,000. Okay. What is said further? The directors have made allotment as follows. No allotment to the applicant of 3,000 shares. That means out of 20,000, okay, out of 20,000 shares which we have received, the 3,000 shares have been rejected. That is the meaning. So 3,000 shares have been rejected. So that means on this 3,000 shares, the 3 rupees you will be refunding it. That comes to 9,000 rupees. Okay, what's next? Rest of the shares were allotted on pro rata basis, which means out of 20,000, if I am going to subtract this 3,000, I will be left over with 17,000 shares. So for this 17,000 shares, we are going to issue only 15,000 shares. So that is what we see it as pro rata basis. So applied over here allotment. So applied versus allotment. So I have applied for 17,000 now, but I'll be allotted only 15,000 shares. Okay. Allotment money to be adjusted on application will be. So now how much is the amount of excess application money that has to be adjusted on allotment? But here they have made a mistake. It has been mentioned that allotment money to be adjusted on application will be. So look at the sentence, they have framed it wrongly. Normally it is only the application money, excess application money can only get adjusted on allotment money. So that means the excess application I will be having is 2,000, because 17,000 is applied but only 15 I am going to allot. So that means there will be balance of 2,000 shares. On this 2,000 shares, I would have received application money of rupees 3, which gives me an amount of rupees 6,000. So 6,000 is the amount which has to be adjusted on allotment money due. So the excess application money which needs to be adjusted along with my allotment money due is rupees 6,000. That means it is option A. So I hope you all would have understood these problems which we have discussed so far. So problem number 18, 19, 20, 21, 22, 23, 24. Altogether we have discussed some 7 problems. So please understand the problem and try to work it out and just see whether you are getting the right answer. And of course options will be almost similar to the right answer, and at times they may also give you a wrong answer which you may feel is the right answer. But please be confident that what you are arriving is 100% correct. This is possible only if you understand the concept. So please learn and work out and practice on a regular basis, because only then you will able to understand the problems easily, and you may able to even what's it you will be able to even work out those high order thinking level questions. So even the hot questions will be more easy for you, provided if you have a conceptual learning. So please, I am sending my video in the YouTube, and also I have attached the description link of my previous video. And please, I request you to understand and work out and share with your friends, and please give your valuable feedback, because we are preparing these videos only for your betterment, and please get benefited out of this. Thank you, students.